I got it.
Morning. Morning. It's now 10 a.m. I will call the Surgeon Water Board Pension Committee meeting to order. Special counsel, please call the roll.
Director Pinto.
Here.
Director Sholas.
Present.
Director Antrim.
Here.
Director Kennedy.
Here.
Councilmember King. Ms. Shine. Mr. Davis.
Here.
Ms. Jonesy.
Here.
Mr. McBull.
Here.
Chair, we have a quorum.
Thank you. This morning, we have 3 presentation items, 1 action items. We'll begin this morning with the first presentation item by Stephanie Chambers, Benefits Manager, and she will give us an update on the upcoming election for an active employee member. Ms. Chambers?
Good morning, everyone. Our pension elections are currently underway. We're very excited. I believe this is maybe the largest ballot we've had in either a long time or largest ballot we've ever had. Here are some key dates. Keep in mind, we did start this process last month. Nominations opened up on Monday, June 10th. They closed Friday, June 28th. Paper ballots were mailed with all check stubs the last pay period. They went out last week. So everyone began receiving their ballots in their Friday pay stub. We do have 6 people on the ballot. The election period began, and I gave you all a revised presentation because the date was corrected. The election period began actually Monday, June 8th. So people have began coming into the benefits office and turning in paper ballots. We do have a register or roll that we are checking off as we receive ballots. We have 1 ballot box. I am the only one with the key, and that box is locked in the benefits department. The election period will end Friday. Again, that date is July 26th. So on the revised presentation that you all received, you'll have the corrected date, which is Friday, June 26th at the close of business, which is 5 p.m. That's when the benefits office closes. Votes will be counted the following week, that week ending August the 2nd. At that time, confirmation letters, or after that time, confirmation letters will be sent to the pension committee, and the results will be posted thereafter. The new 4-year term will begin on Sunday, September 1st. And again, it's a 4-year term. And if you don't know, we do have, again, 4 seats that we typically vote on. 3 are for active employees. 1 is for a pensioner or a retiree. Last year, Ms. Jackie Shine, who usually sits in this area, she was voted on. And so the next 3 voting cycles will be for active employees. This year, the seat that is up for election or re-election is for Mr. McBull. Next slide, please. The nomination process. Again, forms were distributed during pension statement issuance. So as you all know, the last time our actuary was here, he mentioned we had pension statements for distribution. While we were out on site, we were able to start encouraging employees to consider running for a nomination. We were able to issue out nomination forms at that time. And I believe that's probably why we have a greater interest this year in elections, because more employees are informed. Employees must complete and submit the nomination form with 25 employee signatures. Again, we received a total of 9 nomination forms, but they were not they were not properly endorsed. So again, only 6 people qualified to run based off of the 25 employee signatures, active employee signatures that were required. The nomination period, again, was from June 10th through June 28th. And again, the benefits department, we did review and verify and validate all nominees before the election ballots were prepared. Next slide. The voting process, employees will have the option to either vote by paper ballot or electronically using Election Buddy. So again, we started our process with the paper ballot. The Election Buddy, that's the electronic version of voting. Those links should be sent out later this week. I actually did a test run with Election Buddy on yesterday to solidify the process. So you all should be receiving those links very soon this week. Paper ballots, again, were included with all check stubs that went out on last week. The election process, again, began on Monday, July 8th, and will run through Friday, July 26th. Again, the votes will be counted the following week. Confirmation letters will be sent to the pension committee. All nominees on the ballot will be invited to attend the voting, the actual voting of the ballots, along with someone from the Internal Audit Department. That is per the pension rules. Again, election results will be announced by the Benefits Department Friday, August 9th. That 4-year term will begin on September 1st. Next slide. The ballot collection process. Employees, again, have started turning in their ballots or dropping their ballots into the ballot box at the benefits office located on St. Joe. Starting next week, we will be on site. The schedule will go out to employees very soon. I have the schedule here. All right. So we will be at Central Yard on Monday, July 15th, all day with the ballot box collecting votes on site. We will be at the Algiers Water Plant on Tuesday, July 16th, all day collecting votes with the ballot box. We will be at Carrollton Water Plant on Thursday, July 18th, all day with the ballot box. For the days that we are not on site at the other 3 locations, we will continue receiving ballots in the St. Joe location in the basement in the benefits office, room B47. Again, each active employee submitting a ballot will be verified using an updated employee roster, and they must show their ID to vote. All active employees are entitled to 1 vote. Next slide. Vote tabulation and election integrity. Again, all paper votes will be locked and secured in the benefits department. I am the only one with the key. Election Buddy will email all active employees a link this week with the ballot using a unique ID number for online voting. To ensure all employees vote only once, the online votes will be reconciled with the paper ballots. All duplicate ballots will be removed. All confirmed nominees on the ballot, again, we have 6 employees running, and a representative from the Internal Audit Department will be invited to observe the counting of the ballots. Confirmed nominees, they've already received their 25 endorsements from active employees, so that's completed. No employee will be disadvantaged in participation. Each employee will be afforded the opportunity to vote electronically or by paper ballot. Next slide. Nope. That's it. Any questions, concerns, or comments?
Anyone?
I
Okay.
just wanted to add one little statement, and it's not about voting. Well, we've been very engaged with all employees and nominees. The active employees are in the process, if they're interested in submitting a bio to be distributed to our entire employee base. They have the opportunity to submit their bios to me by close of business tomorrow, to be fair, to be equitable, and then I will disseminate all received bios to the employees. Other than that, from the Benefits Department pension area, we do have the LAPERS conference coming. That's the Louisiana Association of Public Employees Retirement System. That is an annual conference that is held in the city of New Orleans. All pension committee members and of course, myself with the pension committee are invited to attend and to register. That conference is going to be held on September 8th. If you're interested in receiving more information, please see me after the meeting.
Same process, we'd call in to request that we be registered? for
Yes,
that?
and I could work with Tanyelle and or Greg
Okay.
on registration.
Okay, September 8th?
Yes,
Marriott?
September 8th. It's at the Marriott. on Canal
Do
Street.
we have a deadline? Do you know the deadline?
The deadline is August 23rd
Thank you.
to register.
Can you send us the email?
And Yolanda, that still counts as one of our
Yes,
training?
yes.
Okay, just so everyone is aware.
You can get all
Thank
your
you.
training there.
Yeah, thank you, Stephanie. Okay, second presentation, which will be by Kwaku Obed. Welcome again. The executive summary and then the asset allocation transition plan. Kwaku?
Great. All right, so I come bearing good news, so that's the
That's good.
That's the good update there. I think in the materials we also had a preliminary update through the end of June. I'll just give you that really quickly before we jump into May performance. But through the end of June, the portfolio was also up. The market is also up around 15%, closer to 16% through yesterday's close of business. So as we're going through these numbers, you'll get a sense that the market continues to really buoy up, which is definitely to our benefit. Through the end of June, the portfolio was up 1.1%, a little bit behind the benchmark, which was up 1.4%, but again, 1.1%. Year to date, that took us to a 5.9% result, more or less in line with the benchmark, which was up 6%. So again, through the end of June, pretty nice solid result for the portfolio.
What's that attributed to?
So generally speaking, the market has been very sensitive to the direction of interest rates. We'll touch upon that momentarily, but anytime it appears that the Fed is closer to cutting interest rates, the market has rallied, and then certain stocks within the stock market, it went from the Magnificent Seven, Tesla and another name has been chopped off, but a very narrow grouping of stocks has also performed really well. Lower interest rates has been beneficial for them, and then the correlation with AI, artificial intelligence, has also been beneficial for them. So those are the two key driving factors, and I'll touch upon that just to expand when we're going through the executive summary. But really speaking, back through May in the time machine, we can see here that the stock market has had a really good 2024. Again, the large cap on the top left-hand side, that number is closer to 16% through yesterday's close of business. So again, the market continues to rise up pretty tremendously. The one area where we've seen a lot of pressure is on fixed income. And in a moment, we'll touch upon, again, the relationship between interest rates and fixed income. When rates went up in response to stimulus spending to really cool off the inflationary nature of the spending through the CARES Act, we saw fixed income lose pretty tremendously. And as interest rates remain at an elevated level, we continue to see fixed income, I should say, be one of the more volatile asset classes in 2024. But here we get a sense of, again, just how strong the market has been. So over any given month, we are going to see volatility in the market. And volatility, particularly on the downside, has been more meaningful with your mid-cap and small-cap stocks. When we think about the performance of the stock market has really been driven by, again, a handful of large cap, mega cap names, NVIDIA, Apple, Meta. These are all examples of what's really been leading the drive in the US stock market. And then the key differentiator between the US and non-US stock market, we'll talk about that in a moment, has been the relative weighting of technology. The US stock market has really performed strongly because of the AI trade, artificial intelligence. Again, NVIDIA is really leading that pack. When we look at the relative weighting of IT in the US stock market, it's around 30%. In the non-US stock market, it's around 13%. That relative underweighting in the non-US stock market has led to that performance differential. A strengthening of the dollar would have also led to some of that performance differential. PCE, this is the personal consumption expenditure gauge. So going back to the Fed, inflation, interest rates, what's the relationship? So we saw around $5 trillion of spending take place during the COVID era, during the shutdowns, and that was really to keep the economy going. That had the direct effect of increasing the money supply. Once the money supply is increased, the Fed's action was to raise interest rates. By raising interest rates, the cost of borrowing goes up. The cost of borrowing goes up. The inflationary pressures on the economy come down. So that's why the PCE has been looked at as a target measure. More recently, the numbers have been coming in line with what the Fed would like to see. So there's the 2% long-term target. And again, the cooling off of inflationary data, again, does lend itself to interest rates potentially coming down at the end of this year. Now, at the end of last year, at the end of 2023, the market had a pretty aggressive, roughly 6 interest rate cuts priced in for 2024. As 2024 has rolled around, the market is now looking at 1 to 2 interest rate cuts by the end of the year. So the difference between what the market was expecting at the end of last year and what the market's expecting right now has led to a lot of that volatility that we're seeing in the marketplace. So the market likes low interest rates. The market doesn't like sustained high interest rates. And any news that leans towards lower interest rates, we're going to expect a stock market rally. Any information that leans towards rates remaining elevated for longer, we can expect more volatility in stocks. And then when rates do come down, fixed income would be the primary beneficiary of that. Just discuss rate expectations. So now 1 to 2 interest rate cuts before the end of the year. So down pretty meaningfully from where we were during the fourth quarter of last year. As we can see in May, it was a good month for fixed income, inflation data, rates cooling. So again, as we think about inflation subsiding, we can expect the Fed to start lowering interest rates. If for any reason inflation creeps up, we can expect interest rates to remain elevated for longer. So that's really the trend that we're seeing in the fixed income market. The yield curve has continued to flatten slightly. So it went from this sharp inverted shape where the longer end was significantly higher than the shorter end. And as we can see, the shorter end has continued to cool off a little bit. So the blue line, I know everything's kind of blended on each other, but the blue line represents the numbers as of May. And again, we're seeing more of a normal flat lining of the interest rate curve. So the US equity market, mixed month of May in the sense of the broad market did well, a 5% result during the 1-month period of May for the S&P, a really solid result. But as we look under the hood, there's definitely dispersion across the different styles. As we can see, the S&P 500, the Russell 1000, these were up around 5%. But then we go to the growth component, the Russell 1000 growth, up almost 6%, value up 3.2. So the takeaway continues to be the dominance of growth at this point in the cycle. Value is still holding up, but growth has continued to dominate. And the same factors, AI, have really been the significant drivers of the growth trade within the US. Just to put some of the performance in context, I think the numbers are roughly right here. Around 80% of the returns of the stock market can be attributed to a handful of stocks. So again, a very, very narrow market, and that narrow market really being driven by some names. NVIDIA, once again, the most common name that you're probably hearing right now. Small caps and mid caps have underperformed large caps in this environment. As we look at the various sectors, again, pointing to technology, you see that technology year to date has been a really good driver of returns. And then communication services, that's also going to have some overlap with technology as well. So we can see that communication services also have been a significant contributor to returns in the S&P 500. So 30% in tech. Let's also throw communication services in to say, around 40% of the market has leanings towards AI. And that, again, gives us a sense of what's really been driving the returns in the stock market. The non-US stock market also holding up well. Once again, the big difference between the US and non-US markets has been the relative weighting of the sectors. But as we can see, the EFI and the ACWI ex-US both comfortably in the positive, close to 3% for the ACWI ex-US, close to 4% for the EFI index. The big difference between the ACWI and the EFI is the inclusion of emerging markets. So if you include emerging markets to the EFI index, that gives you the ACWI index.
I have a question on that.
Yes.
Our new allocation through Sango, which one of those buckets would they be investing in on your last slide?
So Sangha would actually be, they would be on the private equity side of things.
Okay.
Yeah, so even though it's international and it falls in the non-US bucket, it would be illiquid international, private equity international. Yep. So in our portfolio, our exposure would be through the BNY index funds and then Earnest Partners.
One more question. Any one of our allocation managers use AI tools or no?
So I would say the quick answer is maybe. So no one is using AI in terms of completely automating how they manage the portfolio, how they trade, how they manage their teams. But like with us, Siri is AI, and AI continues to creep into the analytics that we all use on a daily basis. I would say that that's also reflective of the managers that we're working with. But none of the managers we're working with presently have outsourced, their entire function
Well, I
to
understand
AI.
you cannot completely 100% rely on
Right.
AI, but at least if they can incorporate because they have positive results.
Yeah, exactly. So AI, whether it's trading, whether it's on the analytical side, or whether it's going through financial statements, we continue to see programs and uses that have been very helpful, and that would also include some of the managers that we work with.
I mean, just make sure we have managers who are incorporating that technology.
Yes,
Not
absolutely.
riding on horse and buggies.
No, absolutely not. So I would say that this is an institutional portfolio. So the managers that we are exposed to, there will be a certain level of whether it's service, acumen, portfolio construction. They would be leading edge, even though this type of investing is not leading edge. It's more you're blocking and tackling strategic investing. They would still be as leading edge as you can be. So yeah, absolutely. We wouldn't be with managers that would significantly fall behind any type of technological advancement. I'd use BNY as a good example of that. The index provider, BNY, huge user of data and technology, and index funds are extremely competitive. So to maintain that competitive edge, you can expect them to invest more and more in technology, trading, just to make sure that every basis point that is saved kind of goes in their pocket or our pocket.
So when you are scrutinizing the next set of managers, could you please make sure they have the in-house capabilities of using these platforms?
Yeah, absolutely. And that can definitely come up during the interview process and during the discussion as well with the managers, just to kind of reinforce any thoughts. Yep.
Thank you.
With respect to the international markets, as mentioned earlier, the relative weighting of technology is smaller. So IT, it's classified a little bit differently, but IT is 12%. If we remember in the S&P 500, it was 30%. So that relative differential definitely is accounted for some of the performance difference.
But that in the classification, if I'm not mistaken, IT that's health related is not sitting in IT in that particular allocation. It sits under healthcare, right? Like an electronic medical record would not be filed with the IT in that group. It'd be sitting in healthcare. So,
correct.
So it's not the same category.
It's not as apples to apples, but just as an approximation, because there is going to be some overlap. You are correct. So the IT sector here wouldn't account for, as you correctly noted, some of the innovations happening in healthcare. But just apples to apples, if we look at The S&P 5, that also has healthcare.
Somewhere else.
So the same issue kind of exists there with the data set. But all in all, just very, back of the envelope. There's the higher weighting on the domestic side to technology. And with respect to the portfolio, as we can see, pretty solid month, 3.5% for the 1 month period. For the quarter, up 2.7%, up 15.9% over an annualized 1 year period. And as you can see, over all periods measured, we're actually holding up pretty well versus the benchmark. So these are some pretty nice results for the portfolio. And then as we look at the various composites, the exposure to index funds has definitely been beneficial in terms of controlling what we call tracking error, but looking at some pretty tight performance relative to the index. When we look at the outperformers, Fidelity holding up pretty well, plus sector exposure, little duration positioning, definitely benefited them versus the index. Cohen and Steers on the infrastructure side holding up pretty nicely. The Fidelity REIT strategy, little detraction there, but as we'll talk about momentarily, the REIT exposure is still a placeholder, so we're still looking to invest in other types of real estate in the portfolio. Where we're overweight and underweight makes perfect sense. We are still allocating to the approved allocation, so we will be overweight in some areas, underweight in other areas. Private equity typically takes a couple of years to get fully ramped up. So again, as this is a portfolio in transition, no real surprise here with respect to the overweights and underweights. And then as we think about the next steps and discussions that we are potentially having in the next couple of months, wanted to highlight again areas where we, at the pleasure of the board, can look to review additional managers for potential consideration in the portfolio. These are the areas highlighted in blue. The private equity side, we've selected managers there, so that's the one area, that's the one bucket that's been filled. But infrastructure, real estate core, emerging markets, and non-US small cap, these are new asset classes. So we are looking for potentially active managers in those buckets. And then as we're looking at active managers in those buckets, US mid cap, US small cap, we didn't have dedicated exposure to these segments. We would also be looking at potentially adding active managers in those buckets. So in a couple of minutes, we'll talk about that and solicit thoughts from the board if that works. The next few slides just point to the changes that have taken place in the portfolio thus far. And then as we think about the next round of searches, the next round of discussions, and so on, we do have on the infrastructure side and real estate side, we do have materials that have been refreshed for candidates that we'd like to take a look at. And then for non-US small cap through to core fixed income, still looking at potentially adding active managers. Now, I will mention this, that we have passive exposure in the portfolio, so it's not like we're out of the market in these very important areas. And, the passive exposure, as we can see, has been pretty helpful for us. So one of the thoughts as we're looking at potential active managers would be still maintaining some passive exposure, but blending that with some active exposure, which is, in our opinion, a pretty effective way to control tracking error fees and have a low-cost area to rebalance from where needed.
Cool.
Yes.
What's the timeline in terms of the interviews that we have to conduct for additional managers for active man?
Absolutely. So we could work with legal counsel and Gray just to kind of codify everything. But from a timing standpoint, we would be ready to go with, there would be two steps essentially. So let me lay out the two steps and then get your feedback on that. Okay. The first step would be, if this is the pleasure of the board, we could have a virtual meeting just to go through the analysis that the Marquette team has put together. So no manager discussions, but really the analysis on the managers, which managers we like through the analysis, and then which managers we'd like to bring in to interview. That can happen, again, depending on schedules and calendars in the next month or two. And we could be very effective with your time where we could look at both infrastructure and private real estate as part of that discussion, because these are closely related asset classes. They're part of the real assets subset, and having a broader discussion about infrastructure and real estate would make a lot more sense in our opinion.
So the virtual could happen in September?
As soon as that, if not sooner, depending on when you guys would like to do that.
Yeah.
Yep. And then following the conclusion of the global infrastructure and the private real estate discussion, that's when we could look at the traditional asset classes, your non-US small cap through to core fixed income. Again, we could tee up a virtual meeting just to walk through the candidates, to be mindful of everyone's time.
So just FYI, that would have to be an open meeting. So some members can, because there would be no action items, some members can maybe tune in virtually, but it would have to be an open meeting. Just, okay.
Thank you. So per the direction given by council, we would work on setting up a discussion, a review of the traditional asset classes, and to be mindful of everyone's time and acknowledging that we already have passive exposure in the portfolio, we could look at, 2 candidates in each segment and potentially look to conclude everything in person in one day once we've gone through the initial screening of the traditional asset classes. So from a timing standpoint, we're still looking at, some point in 3Q for the conclusion of the other searches, but it may actually end up going out to 4Q. And then 3Q would be the conclusion of, 3Q, early 4Q would be the conclusion of the real asset search. And then 4Q onwards, the conclusion of non-US, emerging markets, US, mid-cap, small cap, and then core fixed income.
And you would follow the same process? You all would pare down the candidates and make recommendations to us?
Correct. In fact, let's see if we have the information here. So we do not have the information here, but we have, and I did send this to Gray literally 24, 36 hours ago. So it's hot off the press. But after this meeting, and then again, subject to guidance from legal, the documentation, the analysis that we put together, that's available for you guys to review and just have at your fingertips. And then we could really just look to set up time to discuss that analysis. So the good news is all the analysis, the work has been done. There are a number of documents,
So we can actually have those, that information sent out to the pension committee members?
Yes.
And then schedule the meeting, the open meeting in September.
Perfect.
So that'll be in 3Q. That would be online with your schedule.
Perfect. And then the search books, just to give you a sense of what's in the documentation, these would be analyses on managers in each of the asset classes. So we have top picks, managers that we think would do a good job in any client portfolio. And then the goal is to take the 5 or 6 names that we have, distill it down to 1 or 2 names, and then bring those 1 or 2 names in to interview. And again, as we think about the overall allocation, I will keep on going back to the passive exposure that we have, and just confirming whether a blend of active and passive management in each composite would make the most sense. In our opinion, again, having some passive exposure across the portfolio continues to be a way to manage cost, tracking error, and then just performance in terms of just having a steady stream that's at least a baseline of what the index is doing. So we can have that conversation as we're going through the managers as well. But that would conclude the comments from this end, performance has been strong. It's continued to be strong. As we think about the asset allocation, we continue to move towards the approved asset allocation weightings in certain asset classes, and the conversation that will be teed up in September and onwards, just part of that continued transition.
Okay. Any additional questions for Kwaku, the committee? Okay, thank you, Kwaku.
Thank you.
Again, thank you, Stephanie, for your presentation. We have one action item, Resolution R-113-2024, to accept the cost of living adjustment for board pensioners. Any comments, Greg?
Yeah, thank you, Chairman. Just to inform the committee, the Resolution 113 is our annual cost of living adjustment calculation that's prepared by Rudd and Wisdom, just completed last month, and that's in accordance with the plan rules and regulation. For the plan, the COLA costs, it amounts to $118,000 for fiscal '24. The COLA in dollars, about $5,000 more than fiscal '23, based on additional benefits being eligible for the COLA. The plan formula is unchanged from last year, so a consistent calculation, again, done by Rudd and Wisdom. It looks at the actual CPI changes for the 12-month period ending August 2023, and that calculation was 3.4%, and then the COLA itself is a maximum of 2%. So 2% is what all the eligible pensioners will receive for the third year in a row, and that's retroactive to January 1, 2024. This is the required formula, so a mandatory benefit will be received by these pensioners that are eligible. Again, it's 2% is the fiscal January 1, 2024 COLA. So we appreciate the committee's vote to recommend approval by the Board of Trustees to implement the additional mandatory benefit for the eligible pensioners.
Okay, thank you. May I have a motion to approve Resolution R-113-2024?
Aye.
Second?
Second?
We have a motion and a second. Any discussion?
So 2% is the maximum according to the rules of the pension?
Yes.
Okay. Is that something that would be revisited in the experience study?
I would.
It's similar to any benefit enhancement, could be revisited, with additional funding sources, but yeah, as we discussed through a pension plan design review and experience study, that's where it typically comes up.
Okay.
And I just wanted to reiterate that the pensioners have to be over age 65, and it's just 2% of the first 10,000. So it's not their entire pension benefit, it's just the first 10,000.
Oh,
Does that make sense, Tyler?
yeah.
2%
So they-
of the first 10,000,
So they only get a 2% increase on the first 10,000 and everything else stays the same forever?
if they're over age 65.
Max payout right now is written. We did ask him if in the experience study they were going to be looking at that, and he said yes, they were going to be looking at that as part of the experience study.
Okay. Any public comment?
Public comment, Chair.
Okay. All in favor?
Aye.
Any opposed? Motion carries. Thank you. We have one information item for the committee members to review. Any public comment?
None, Chair.
Okay. We have no public comments. Therefore, if we have no other matters for discussion, I will entertain a motion to adjourn.
Aye.
Second?
Second.
All in favor? Motion passes. Thank you.
Thank you.
Okay.